When a client comes to our office, one of the first things we need to find out is his income tax residency, because that will determine the type of tax obligations this person will have in the US. Hi, my name is Andrea Aguilar, attorney at Counsel, a boutique planning firm in Miami, Florida, where we help global families and businesses protect their assets and leave a legacy. But let's start. If you are a US citizen, regardless where you reside, or if you are a foreign individual with a green card, then you are a US income tax resident. However, in the case of foreign individuals who are not permanent residents, the rules to determine tax residency are not that straightforward. In those cases, we need to look at their presence in the US to see if they have met a test called the substantial presence test. And under this test, we look at a person's presence for a period of 3 years. For instance, if you are a foreign individual and you want to know if you have become a US income tax resident, you will have to count all of the days you spent in the country in the current year and add to that 1/3 of the days spent in the prior year and 1/6 of the days spent in the second prior year. If this totals 183 days or more, then you are a tax resident for that year. But please note that when we apply this test, we only focus on the person's physical presence in the country. This means that foreign persons without a visa may become US tax residents as well. So at this point, you might be thinking that there is a disconnect between immigration and tax rules, and yes, you're right, there is a disconnect. Residency for tax purposes is not equivalent to residency under immigration rules. Another thing to keep in mind is that there are exceptions that may allow you to exclude certain days. And these exceptions include some 3 provisions, the closer connection exception, and certain type of visas like F, J, or Q visas. But now that we know who tax residents are, let's talk about the consequences. Well, if you are a US income tax resident, you will be subject to tax on your worldwide income, and you will have to provide annual information on certain assets that you have outside the country. But if you had paid taxes to these countries, don't worry, you can claim a foreign tax credit, so you're not taxed twice. To conclude, if you are thinking about coming to the US, even for a short time, it is important that you become familiar with our tax system. You will not want to be in a situation where you have become a US income tax resident and unknowingly be subject to reporting requirements and even heavy penalties for failing to comply with your tax obligations. Thanks for watching. Please like, comment, and share this video. Also, remember, great families plan for great futures. Who are you planning for?